Fundrise eFund's single-family home strategy has been nothing but a disappointment for the past few years. The eFund had a 4-year return of just 1.5%, which is underperforming pretty much any investment vehicle out there except for bank CD accounts and bonds. The Fundrise team has finally decided to abandon the ship and change the course of this eFund. Is the new strategy doomed to fail? Or will we see a resurrection of this eFund? Coming up. If you're new to the channel, my name is Trey and I'm a long-term investor in stock, crypto, and real estate. If you enjoyed this content, please check out my entire Fundrise playlist down in the description below. It has over 30 videos on everything you need to know before, during, and after investing with Fundrise. Okay, let's get started. Recently, Fundrise has released a news article regarding the changes they're making to this eFund. I will summarize the article and give my explanations and opinion as we go along. So, Fundrise eFund was launched in 2017, and since then the strategy was to acquire and develop single-family homes primarily in Washington, D.C. and Los Angeles metropolitan areas. Fundrise team saw a strong demand in housing in close proximity to urban centers. In other words, people were buying or renting houses in the suburbs within the commuting distance to the cities, possibly for work or entertainment. Fundrise team then states that this strategy resulted in a net positive returns for the eFund. I don't agree with that, since a 1.5% return over 4 years is hardly a good return considering what we saw in the last few years with all other investment vehicles. In my opinion, they should call it for what it is, a giant failure. Then they go ahead and blame this failure on, you guessed it, COVID-19. Apparently these days, you can blame pretty much anything on COVID-19 and get away with it. Now, I understand that COVID-19 caused migration away from the urban areas and that prices of homes there hasn't grown and the price of construction materials went to the moon. But the fact that COVID-19 started in 2020 and this eFund has been failing since 2017 isn't mentioned in this article at all. So my suggestion to Fundrise is don't sugarcoat it. Admit that you bought the top of the market in those metropolitan areas and move on. Trust me, none of the Fundrise investors will be mad. We all did really good in 2021, regardless of what's happening with the eFund. Then Fundrise goes on to state that they will look for opportunities to exit these existing assets that they have in this eFund of these single-family homes and transition to a new strategy focused on industrial real estate market. As reasons for transitioning to industrial real estate, Fundrise mentions such things as increased growth of e-commerce and its subsequent impact on industrial real estate. They also mention that demand for industrial assets is at an all-time high, while the supply of these industrial assets is at an all-time low. And of course, the increased rent prices for these assets. And finally, Fundrise announced their partnership with a company called Saltbox. They state that Saltbox focuses on, and I quote, democratizing access to industrial real estate for smaller e-commerce companies, unquote, similar to how Fundrise is attempting to democratize access to residential real estate for us, the retail investors. Traditionally, large multinational e-commerce giants would get the best deals on their operations and logistics solutions, and smaller entrepreneurs were stuck with the second best and more expensive options. Well, Saltbox is changing all this. Saltbox is the modern warehouse for smaller e-commerce companies, and it is on a mission to empower the next generation of entrepreneurs to grow their business by providing flexible, state-of-the-art operations and logistics solutions. Now that's a handful. Now, what does it actually mean? Well, let me tell you. In other words, they provide a warehouse or office space and possibly shipping solutions for smaller businesses. So they own a giant building with a lot of rooms somewhere by the water, and then they rent it out to smaller businesses, entrepreneurs who just don't have enough room in their tiny studio apartments in the cities or in the basements of their houses. Saltbox's unique model centers on offering a human-centric, I guess they're not going to use robots, a human-centric warehouse for small and medium-sized businesses and e-commerce companies, including the use of flexible office space, conference rooms, access to loading docks, and even photo studios. Yo, who would have thought? It's just a room with a camera in it. The company currently operates 5 locations and, according to them, is growing rapidly. As for the partnership, Fundrise will invest $128 million over a 2-year period into the creation of new Saltbox locations. They plan to do that by acquiring existing industrial real estate with a tenant already inside, and then over time convert that into a new Saltbox locations. Now, hopefully that existing tenant won't just get kicked out upon transition to the Saltbox warehouse. In return, Fundrise will receive exclusivity over certain markets, I'm not sure what that means, as well as ability to purchase common stock of Saltbox based on key deployment milestones. Now, this is getting better. As far as I can tell, Saltbox is a private company founded in 2019 and has around 70 employees, and Fundrise will take stake in the company. In my opinion, if both Fundrise and Saltbox succeed in the future, Fundrise may move to acquire Saltbox, because essentially they're doing the same thing just with different industries. Fundrise is doing it with residential real estate, meanwhile Saltbox is doing it with industrial real estate. Now, if Fundrise does acquire Saltbox, that of course will make current Fundrise IPO investors very happy once they see the price of an IPO double, because the valuation of Fundrise will be so much higher if they have industrial real estate within their portfolio. Of course, these are big ifs, as Saltbox is a very small and new startup. Only time will tell, but we have to trust the Fundrise team. I'm sure they did their research prior to investing $128 million with Saltbox. Over time, assuming the business continues to be successful, the eFund has the potential to own an attractive portfolio of new, fully stabilized industrial assets while also receiving the benefit of the increased value of Saltbox itself, thanks in part to the growth in new locations that the fund itself has financed. In conclusion, it seems like a good partnership for both Fundrise and Saltbox. However, only time will tell if this strategy turns out to be successful. We have to be cautiously optimistic and not overextend ourselves as investors in this particular eFund. Now, I will be making a separate video going into more details about Saltbox as a company and on the details of this partnership in the near future. Now guys, thank you so much for watching. If you enjoyed the content, please don't forget to click that like and subscribe button. And if you're new to Fundrise, please use the link down below to open a new account, and you will get 90 days commission-free investing with Fundrise. Thank you so much for watching, and I'll see you in the next video. Take care.